I send? Dun 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 dun. Okay. All right. Five handles Carl. Nice name. Hey, can you guys hear me? Oh, Pepetto, yeah, what up? I went long, yeah, man. I gave you the reason for my for long in the group chat. So remember, let's see, let's remember I said, okay, when EMAs are stacked on the weekly, and which we had that right here. Da, da, da. Okay, EMA stacked on the weekly. It's been like that for a while. There's no reason to find shorts. We look for longs when weekly pulls back and then we continue. So we had this fair value gap created. And this week, what did we get? We have big news drivers. So FM, FOMC brought us down to CE of the weekly fair value gap. Oh, volume too low. How about now? Can you hear me better now? Yeah, dip by London close, took out the bottom. How's it? How's the volume now? Still low? All right. Okay. What about now? Let's see. Better? Is it still okay? Maybe a bit more. All right, shoot, we'll go all the way up. Interesting for live streaming with OBS, the volume's all the way up. Yeah, yeah, it's maxed out now. All right, hopefully let's see if I can go to settings, audio. Dun 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 dun. Okay, cool. I'll leave it as for now. But what I was saying, Pepetto, is that so like ICT only talks about EMAs, using it for the weekly as a barometer for, are we hunting longs or shorts. And so he said when the EMAs are stacked like this on the weekly and it's showing, bullishness, then we want to hunt for long setups. Now, obviously, we're going to get retracements like this, okay, but we look for certain things, and this was a daily order block that propelled us forward. So here we are right here, and we have this nice rejection of the CE of this weekly fair value gap. So we can just go back down to the daily and we look at Monday. Tuesday runs the high, comes back down to here, weekly fair value gap CE, and then we CSD this candle. And so if you look at the news driver, what was it doing? The news driver just took us back down into this candle, which is what we want to see. So just taking the EMAs off now, NFP took us back down into this candle. So we'll just draw a line there. And then we'll come back here to the hourly. Okay, so again, consolidation. This was the after hours imbalance. Here's that daily previous high that we ran through market structure shift. Okay. Came back down, run the low of this candle, and then we close higher than 50%. So this is now a order block. We want to see this next candle come into this BPR. I don't know if it gets 50%, but kind of close. Price is in a hurry. So it comes almost to 50% balanced price range. And then we have expansion. So what I'm looking for is if NFP, if what we mentioned, if NFP is going to hunt for weekly and possibly monthly draws on liquidity, well, where's the weekly draw on liquidity? Here's the previous week high. So why would we hunt shorts when this is the draw? And so then what we're looking for is anytime we have a retracement, let's get these out of here. Too much noise. Anytime we have a retracement, we're looking where is that retracement likely to go? Okay, so signatures and price, this area right here, when you have all these long wicks that are being put in place and they're not really being ran, a little bit higher, a little bit higher, a little bit higher, we have to view this as engineered liquidity. And so this is where we look for like our turtle soups where we're going to expect price to run this and then come back up. So, and then if you look at the entries after this, every single entry long is money. You have two down close candles that run liquidity, and then what happens with this very next one, CSDs, leaving a 5-minute fair value gap at 10 o'clock at an hourly open. So, and you have 4 a.m. confluence. Okay, so the run down here, long. What happens? This runs liquidity, this candle right here. This 5-minute down close candle goes into a fair value gap, fair value for buying. That's a run on liquidity. CSD, okay, closes above 50%, continues. What do we expect? We expect a candle to dip into this balanced price range, back into this order block. What do we get? We don't get the 50% entry. This is my original entry, was hunting right here, and I didn't get that. I was going to add right here, but I was messing around with the live stream, so which is fine. We're just, all this is practice. There's a lot of time today. We could even get a run back down into this order block because this hasn't really been tapped. So let's see here, settings. Dun, 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 dun. Background. There we go. Okay, so even these wicks right here, like if you look at the pattern of price, these wicks, and you have to have narrative behind it and time along with it. Um, again, looks like another engineered um, swing low. So if we come back up and we rebalance this, okay, and we'll see how high price comes back up. We could keep going and expand above the all-time highs. Depends on how much price is in a hurry. We have 2.5 hours left. So that's kind of what I'm looking at. Okay, so is this going to give us bullish price action to here, rebalance? Okay, and what do we know about price that rebalance itself on the way down to an area of liquidity? It's so price can hurry back up through it. So these are things that I'm thinking about as far as expectations of, well, why doesn't this have continuation through? Well, because this and this move up creates a swing low that if someone going long says, I'm going to put my stop right here, and you don't get a breakaway gap through here, you can expect this low to be ran. So then using this same logic, if you're already in a long position, okay, and we still have a lot of time left, and we can go back to viewing the hourly. Okay, well, where does that 5-minute order block sit with the hourly? Right here. Okay. Oh, and look what's in that 5-minute order block area. It's an hourly order block. So I'm just going to draw that out. And this is for potential of we get movement back down here and then expand up. I'm not saying that's going to happen, but I want to have openness of why certain structures being set up. And who knows, we could get the run on the all-time high first, and then price starts to move back down towards here. And then Monday we get continuation out of this order block and back up even higher. Does um does everything I'm talking about make sense so far? So if we look at this same type of structure, but now on a smaller time frame, look at this right here. High, high that doesn't break the high, another high. We run two of the highs, but then come back down here and sweep all these lows and then continue up. So in the 5 minute, we could get that same type of structure. And let's see if there's an example from kind of previous in the week, kind of almost like this. Highs, highs, highs put in, runs the highs. Okay, we still have this range that we're in. Comes back down into this like order block down here basically. And then we start making the move higher. So again, the failure swing. So now we're setting in these highs that are lower. For reversals, what do we want to see? Reversals, I'm going to move this back down to here. For reversals, we want to see a swing high like this wick put in. Some sort of intermediate swing high. So here's a good example right here on this hourly, which set the all-time high. So you notice how this hourly really wicked back down. So it puts a wick. That's a decent size wick. And then price comes back up and we have a very small wick and candle bodies with CSD. That's a reversal pattern. This is the initial liquidity set so it can run it one more time before moving it. So we look for this kind of pattern in price. And you can see that as price started moving back down, like this long wick, engineered for it to get ran later. Price rebalances back up, comes back into this order block, and then comes back down. Nice little rebalancing action on the 1 hour. And we're still looking at like price running into here. So again, this here's a 1 hour. Well, why is this 1 hour? Why did it run up so fast and then run back down? Because it's engineering an area of liquidity to be ran. Because this draws people to put stops right here. And if it's always looking to run stops and rebalance, then you have to look at, okay, what looks like it's being engineered and what looks like it's structured to move in the direction we want to go. So this right here is a long wick on the 1 hour, followed by another long wick. So we'll see how this hourly closes. But I could easily see this closing as a down close candle. Like I said, coming back into here, tapping this, and then expanding. Or we get something like where this gets put in and then the next hour expands up and then we get another down close candle. We'll, we'll see how it ends up. A lot of time left. So that's the other factor too is that how much time is left in the day. Like this objective right here, 177.56, why did it stop less than 40 points shy of the all-time high? And when you see that and you're like, man, that's like only 40 points away, why would it stop? Why didn't it just run through? Well, there's a lot of time left. So what is the algorithm going to do when there's enough time left? Well, it's going to engineer an area of liquidity. Yep. There you go, Maddie. Order pairing. That's, yeah, exactly. That's how you create order pairing. You have to create some place for someone to put their stops to create order pairing. So now it's just letting time play out. And I don't know if there's earnings. I think there's earnings all week this week. I don't know if we have more like blue chip earnings. But we'll see. Oil and insurance today. Okay, so we might not. So we might get we might finish the move before yeah, no tech. So to me tech is where the volatility lies after hours. And we saw that yesterday with this candle right here. Uh, just a straight, what was that? 174.18. A 200 point after hours candle. You know what I mean? But that's like that's how they do it sometimes. So what I'd like to note right here is that when we're looking at like signatures and price action, they're always going to put something in to make it seem like it's what you're looking for. So if this was um, like a reversal pattern and not just engineered liquidity, well, there's two areas where like price would typically have gone. Typically, this little swing high put in, we would have wanted to see this ran and then CSD'd, and either price would have stopped somewhere at the base of this candle and came back up in here like this and rejected and continued quicker, sweeping these lows fast. And if it was going to come back up into here, it should have tapped this. But see how it leaves that? So that means there's an imbalance that it left purposely. And then not to mention you have equal highs. So when you're uh, watching price, like think about those things to help you manage a position. Let's go. We'll just set a limit buy right here. Well, you could think about those things for managing positions. Yeah. So then this is like, to me, like this honestly just is the boring part. And it's like you could set positions for where you want. Like if you want to buy this order block, then just set a buy on the order block, put your sell stop below it, and it's like it's either gonna hold or it's not. You know what I mean? You really don't even have to watch it because you already have your logic set up. So this hourly should hold and time should permit that the close of an hourly candle happens somewhere right here and the next open happens right here and then goes up further. And we have 25 minutes, so those are the kinds of things where if you're feeling impatient, just set that stuff right there. Set your order, set your stop, and then go do something else or study or whatever. Because I mean, this just staring at price action does get boring. All right, should be sweeping these lows. This is a balanced price range in this whole area. This will rebalance using an order block, and we should see the all-time high taken out. I'm thinking no big retracement here. Yeah. Sometimes they run this like again, they're putting in like just a temporary swing high. So like this kind of just consolidates, like it's not in any hurry, you can tell. A lot of overlapping, um, putting in these like real long wicks everywhere, engineering all this liquidity. Um, and then you get the two little tiny hourly, almost like retracements or order blocks in the bullish flow. And then that last hour, it runs that, and then you get another strong hourly candle into the close. I mean, there's a few scenarios for what we could see. Like I said, there's a lot of time left, so you just kind of set possible expectations, and that way you're not surprised with what they how they run it. Yeah. And see, that's one of the things too that's like, okay, like all these long wicks, these are just left for another time. You know, that time could be weeks from now. It could be on another, deeper weekly retracement. And so then you're going to be targeting like, oh man, look at this really long wick right here. Man, I'm targeting that. Yeah, exactly. Because as they're running bullish order flow for however long, these things entice people to say, well, I'm gonna put my stop way down here. I just went long with 3 micros. Price gets up to like 185. And then maybe we see a sell model that comes back down and takes out this low. Well, it's going to hunt these swing lows that were engineered. Those are going to be areas on different days that it's going to target. Mostly on the typically hourlies, your daily targets. But I mean, look at you got equal lows put down right here. Some big wicks on the hourly right here. Another one right here. You have a daily order block down here, and then see, it's like to me, I see this getting ran however far out from here. Whenever we have another deep retracement, what does the daily look like? Um, so again on the daily, see how this wick was put in? Really long wick on the daily. Come back up, and these candle bodies don't run the high and then CSD. So that's again, that's your signature with the algorithm of we're going to make it look like it's a reversal. However, it's not. We're just going down to the weekly liquidity pool. Oh, Matt's going to take me down to the 1 minute. All right, let's see. $11.50. Da, 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 da. What'd you say? 12:02. 12:52 Eastern. Oh yeah, so 11:52. Yeah. Yeah, that 1 minute's looking pretty nice. Here's another turtle soup idea. Long wick. It would have been nice if it ran this. It didn't. It ran this one. But expect these candle bodies to get ran by a strong candle body with CSD right away. And then look where that's at. It's right below the London close range, right into a 1 minute fair value gap. Boom. And this old high right here. And look at those candle bodies, yeah. Yeah, that's actually pretty nice price action on the 1 minute, Matt. Yeah, so this kind of stuff right here is you can look at this as like turtle soup. So then turtle soup CSD, and you get a little aisle fed order block entry. All right, we got hopefully capture this 80 handles with the next hourly close. I was kind of hoping for 1800 today. Um, I don't think we'll get that. That's quite a ways up. I was hoping we would just consolidate and then push hard and capture 400 handles. Um, but instead it gave the mostly rebalance. Where'd this hit? Tap this wick right here. Looks like it just came shy of it. Yeah. Yeah, there's a lot of points here that's so then there you got this hourly over here. Let's just hide this so it's not shown on the hourly. Boom, boom, boom. Um, and that's what I mean. Like you have these like wicks. Like it would have been nice if this ran this hourly low, or if this came into here right away. So it almost seems like with the amount of time left, we have 2 hours left plus after hours. This could be a failure swing. Engineered liquidity with these two hourly lows comes back down into here on that next hour, starts to retrace and then finishes off in the final hour. Again, we'll see. There's just so much time left, and we're really not that far away from the destination. Let's see. Hopefully this. Boom, boom, boom. Nice. Pepetto working the call signals. Oh, there we go. That's way better. If you run to target, that's a weekly outside bar. Yeah, which is nuts. Big expansion coming if so. Yeah, that the H1. Oh yeah, we're on the. Yep, that bad dog right there. Yep. Little signatures and price. H1 Devil's Mark at the high. Who named it the Devil's Mark? Is that a did TCM drop that? All right. Oh no, what the heck is going on here? Okay. Chat, there we go. No, someone on Twitter. Oh, Trade Dexter. Hmm. He has some good work. He does a lot of analytics too. Yeah, if I have a feeling it would be that we retrace one more time, like a fast, hard retracement. Did we get that? Yeah, I wish this was ran. That would give me more confidence that we aren't going lower than this, but it wasn't. And a lot of long wicks being put in. Like, why are we stacking long wicks that haven't ran each other? That's the kind of stuff that I look at. I'm like, ah, oh, it's suspicious. 4 minutes left. Yeah, watching and waiting. That's the tough part. Let's go back to the 5 minutes, see what it looks like here. Yeah, like freaking, look at that, like zero follow through. Yeah, 2 minutes, 5 minute chart. That's the thing that you have to look at too is how many candles have been put in this little range right here. And why hasn't there been any breakout? As you can see in other areas, how price breaks out of a range after it's dipped into what you might consider an order block. All right, new start to the hourly. Bum, bum, bum. All right, we're going to push past these, get continuation. Let's see, let's run a fib right here. See what our projection levels are. All right, so 2, 178.07. So we should be game for 2. So we'll just move that right there. Yeah, so I currently have it set for no delay. Not sure why. It still has a little bit of a delay. And I bumped up the bit rate to the recommended 68. So just trying to make it as seamless as possible. Yeah, this is just kind of setting everything up on the fly. It's weird because on the actual YouTube live streaming page, it's like not showing the live stream. Which is funny. It was earlier. All right, so yeah, projection fib. We're just using the candle that ran liquidity, the opposing liquidity run as our measurement. So we'll just set that right there, and then we'll get rid of this. The only thing about the YouTube live is there's no what do you call it? You can't actively talk with other people. It's all chat. Which I guess will be good for just streaming without having people chiming in the future. I still think at least the Discord, you get yeah, you get the interaction, so you can dialogue at least over topics. So I looked at Tanya Trades, and she just sets up a webcam to show her face, so you could see I don't know what emotion or see that it's a real person trading. She's getting props from ICT though for live trading. I know. You know what's funny is I like looked up like on Instagram and stuff for like female traders that don't have Twitter accounts. I'm like, dude, you could totally just like copy and paste their pictures and blah 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 all this stuff and to open up a fake Twitter and you'd get like instantly 6,000 followers. It's crazy how many people follow pages just because it's a female. Oh, just too easy for them in the marketing. Yeah, probably. I think so too. I bet you there's a bunch of like female pages that are actually ran by men. Yeah, no, I don't. There's nothing to be offended about there. It's just the facts, dude. The facts are there's a bunch of dudes out there on the internet that just want to stare at chicks' pages all day. So if you're in that category, you just have the upper hand. You combat that though with live trading and calling out price action. Like you can't. That's it. You can't like work around that. Even ICT says like, what do you say? Yeah, maybe if you're not good at executing, you can just still call. Have paid call out services just because you can call price action well. Like people will be all in for that. go. I wonder if we just wick this and not bag it. I'm trying to think how that would play for the weekly candle. Just kind of slowly. I mean, this is all like very slow price action within here. Just created this range. It's been just slowly grinding through. We haven't even broken that yet. So yeah, I'm curious if we don't bag this high on the weekly. We wick it and then just come back down. I'm just trying to think what kind of overlap we'd get with. I mean, we could. This is such a long wick that we could get, like we could run it, come back down, and then look for next week to, oh, look at that. The 50% of this wick is sitting right at this order block. Tap like 50% or something and then continue up. Like I'm just thinking about like how the next weekly candle is going to line up with this week and the previous with this long wick. And usually we target like 50% of a wick. So, all right, let's pump. Silver Surfer with the right answer about NFP. Let's go. Give us that 2 standard deviation level. That's what we want to see. A lot of time left. Yeah, I think eventually we're going to come back into this weekly order block. Um, we can dive at higher time frame real quick. So this is what I was kind of expecting. Oh wait, here we go. So here's that opposing liquidity run on the weekly. I was kind of thinking we get to this 3 mark. 183.46. Where's it been stopping at? Let's go on the daily. Yeah, kind of checking out where price. Yeah, it got to 2 and then it pulled back. So if we look at that, you can see that these candle bodies hits 2, creates a little wick, then it runs that and then pulls back, retraces back to here. Basically half a standard deviation. And then from there, we basically reached up another half standard deviation up. And so a full would be all the way up to here, this 183.50 about. Yeah. So again, 3, 3.5, maybe then we get a decent weekly pullback, maybe 3. You can take other liquidity runs and then measure out how far that move went up. So if we take this one right here, we got up to 3 before we had a kind of a major pullback. So I'm just taking that same logic. It's probably gonna be a little bit different because it never exactly repeats itself, but that's a pretty decent number. This is daily. What do we get when we get right here? This just makes it smaller, so then I was looking at targeting like 5. We kind of halted right here at 4, pulled back. See, some of these you have to look at like where it's running to. Like here, it's hitting half marks, 2.5, almost hits 3.5, like to the T. 4.5, we're looking at 1800 basically. Just kind of play around with it and see where. That's why I started adding in all the quarters and halves because I noticed for different areas it would like target like all the quarterly ones, and so you just kind of see where prices like look where it runs to and then look where it makes like a pullback. Like this kind of gives you that body's kind of hanging at 1.5. Then the next one is 2.5 and it kind of consolidates and pulls back. Almost tags 3.5, then it pulls back. 4.5 is 1800. That's like a big psych level. So it all depends on where you're measuring. This would be like the daily actual opposing liquidity run leg from that high low. So just gives you areas to shoot for, or and areas to expect. Like, oh, okay, when might we pull back? So you look for those kind of signatures where it like puts in these little order blocks, and then that way, when we get up into these levels where we don't have price to look back to the left, kind of start anticipating that kind of stuff. Another long wick. I think the key to build on too is building on like your narrative with these, like when it's gonna run it. All right, we can get rid of this, get rid of this, clean this chart up a little bit. Okay, got that hourly level marked. And I'll leave these two things. These just look like they fall in line with the 50% of last week's wick, so leave that for later on. Yeah, nice work, Maddie. Ultimate, ultimate scalping right there. Pull off at highs ran, reload at the retracement. That's what I want to start doing on the hourly. Here's a good, all these long wicks put in for the hourly. So you can see this long wick put in here. The high gets ran, and then NFP candle doesn't run this high. And you would expect this to be saved for later, and then you have the equal lows, obviously. Really nice. How did this look on the, let's see how this looked on the 1 minute. This reversal. Oh yeah, perfect. Equal lows set in, then candle bodies run it. That's like As soon as the CSDs, you're buying. This is almost a lot of these equal lows too, especially when they're set up like this in line with the range. And then you have another swing low. Look at all these like swing lows put in long wicks. But you have these sitting right here. This is a turtle soup candidate for sure. Dang, CSD's this whole sweep right here. Doesn't give you any candle body entries. That's how fast it's going, but closes above this wick. Does it get the candle bodies of this range? No. But you get an entry back in this wick as this closes above and comes right back down. And it left a gap. Consolidate. Equal highs put in. All these long wicks. Small order block candidate. But again, when you see this, you can look for what's to the left of it. But again, another turtle soup candidate. Closes above this candle, and then you get a move back down in this candle. And that's it. Interesting little gap down there. What do we got here? So far it's we're respecting bearish PD arrays right now. So here's the equal highs. The highs ran, puts in a long wick. Body closes above this wick and CSDs. Mm-mm. Oh. I mean, that's okay. Like, you're grabbing profit. That's what it's all about. I think the longer you study price action, the more years you have under your belt. Like, I feel relatively new compared to like probably most traders out there with only like a year and a half of ICT and really studying price action, and then maybe 6 months of TCM, and he really dives into price action. I think you get 3 to 4 years of actually studying price action under your belt, and like as long as you're not like trading wildly to where you're making tons of mistakes all the time, and those mistakes are going to cloud your judgment constantly. And that's why it's crucial to be patient and just study and see what price should do and what you want to see, and it should act accordingly if it's going to go in your favor. If it's not, if you're constantly getting stopped out, then you have to reevaluate. Well, where's my draw on liquidity? But I think with enough time, you should be able to feel comfortable taking profit at certain places, leaving runners, and having full confidence in where price is ultimately going to reach for during the day. But nice trade. Nice trade long. Yeah, see 5 minute. Look at how long that wick is on the 5 minute. Yeah, nice little 5 minute fair value gap entry. I think this is where end of day becomes can become tough. Like price really doesn't have to. There's an hour and a half left. Hour and a half left to move. 30 points. It doesn't need to expand and get there quickly. It can take its time, give you a lot of overlap. Like these are the fast moves. Fast rebalance right back up, knowing that it's going to hit some buy side liquidity above us where it gives you very, very short entries. Let's see, 5 minute. So this was a very subtle 5 minute order block entry. You have this run down here. This just wicks way down here, runs all the liquidity out. You know that these long wicks are going to get hammered. This candle closes above here, and then you get who knows how much time it lasts in there, but I'd imagine it was fairly quickly. So basically, you're buying as this is coming back up, and it's getting, I'd say once it gets above this candle body, you're just buying everything right here. So the interesting thing with this hourly is that if we don't reach above here, um, as this closes in the next 20 minutes, there is potential for this is a 3-bar swing high. And so this close above here, even if it doesn't take out this up here, there's a potential for the next one to close back down. I'd like to see this one do the reaching. That would be preferable over the next hourly candle doing the reaching, unless it comes up here just shy and then we run the top of it and retrace back down. But again, we're looking for if this reached liquidity, which you can see this wick took out liquidity, and then this close above here and takes liquidity, there's always that chance that the next one is going to come back down and CSD this candle as a possibility. It's something to just be cognizant of. So then you're going to start looking for, as this hourly candle closes, if we haven't reached up and taken our target, um, on the 1 or 5 minute, you might start looking for CSD, just so you're not holding on to something with hope. So that's how I like to frame anytime we get a wick, a long wick that runs liquidity, then we have a candle that closes above it. I want to, and it could also be like a breakaway gap too, where we close above here and the next one small retrace and then continues higher, and it's just breaking through that high. But especially when we're around this area right here, and who knows, we could bag this high and put a breakaway gap in right here. So, but these are the scenarios that I tell myself can play out, so that I'm not stuck with just, okay, it has to do this, it has to do that, and forcing my bias on price action where judgment can become cloudy. Yeah, I can move my stop loss up now. There's still a lot of time, and it's like, look at this 5 minute candle right here. So in 5 minutes, price moved 150 or 55, almost 100 points in a 5 minute candle. So just the thing you want to be wary of is that you don't know when the algo is going to turn on a volatility, and this is speed. This is speed to get to an area. So was it speed to get down here just to run liquidity so that could continue up, and we're going to get momentum up through here because it has an area up here that it wants to really get to. It's end of day. You have a lot of different, you know, places where people would put their stop losses, and we're kind of not rushing to this. So there's always a potential for an opposing liquidity run that comes with a lot of speed to stop hunt. And then it can also have, here's the other thing, the flip side of that is you can have speed on the rebalance. And so in a 15-minute move, you could have 100 points covered in a down and up move. And so then what? That's just, and I've seen that happen before towards the end of the day. You know what I mean? Look at this hourly candle, almost a 200 point move, and then boom, right back up. So in 2 hours, you had 400 points worth of price action. Does that make sense, Alejandro? Um, I used to use the Asia range a lot for that actually, like just standard deviations of the Asia range. So let's see if I still have that standard deviation tool. How many do I have going down? 6 on each side. Where does 6 put us on the hourly? 6 puts us right at the all-time high. Yeah, I mean, it's another. Here's the thing: is that you can use a number of different ways to accomplish what you want to accomplish, and there's not like one way or another that is like, oh, this is the end all be all. And so it's just whatever works for your trading system. And so that's what I'll always go back to because as you learn all this stuff like ICT, it's like, oh, you use uh, CBDR, you use the Asian range, opposing liquidity run, all that is going to give you where you want to go. And so you could have used standard deviations on Asia, and it's like, okay, well, what do we get? We got almost to -4. Candle bodies kind of like hold at 3, and then we get a reversal. We get this run up to half, opposing liquidity run all the way through Asia, back down to half. That's kind of a key level. Asia's half of that range. You get some price action movement along there. Like here, you can see candles wicking to the 50% level of Asia. That happens to be midnight open, happens to be 4 a.m. A lot of confluence right there. Okay, one more run, you got your turtle soup, comes back up. And so then you could target like, okay, well, I'm gonna target 4, I'm gonna target 5, I'm gonna target 6, and move your stop losses up accordingly. And that might be how you run your trades, and that's fine. Like I'm not gonna tell you, oh no, don't do that, or I think trading is very personal, and so the best thing each individual can do is find what works for you and then just stick to it. Stick to that model, stick to that way of finding targets, and just keep honing in on it. Give yourself a couple years of running the same model and the same way you do things over and over again so that you can build and have a really good base on what stands out to your eyes, what you catch easily. And the thing with ICTs, there's so many options. And I think we talked about this in a previous stream, but it's like there's so many options you can use. There's order blocks, there's fair value gaps, inverted fair value gaps, breakers, and so then there's a whole other, if you follow the currency merchant and all his stuff, he breaks down PA even more with EOs and timed EOs and ranges that are created. So for me, order blocks tend to stand out, and then like I said, I like to use the opposing liquidity run. And there's different time frames you can do that on. It's like depends on what time frame you're looking at. So it's like if I use this 5 minute, here we go, we're almost at 6. I kind of prefer to use the hourly. I think the hourly gives good setups. And so if you use that as your opposing liquidity run, it gives you pretty good areas. Okay, so we get about 4.5 on this one. What was that? No, that's into the next day. So 3.5, just about, goes up to 4.5. And this is where, and again, this is what I'm saying. Like each one is a little bit different. So if you look at this run right here, opposing liquidity run, we kind of get this run to like 2.5, and you see like a breakdown. This one kind of lands at a quarter, but almost comes back to like 1.5. Like where do the candles stop, and where is there a retracement at? And then kind of use that as your guide. But this is just a small retracement on the part of a larger run. This was your opposing liquidity run for that movement up. So this runs into the daily order block, running liquidity, and then CSD, and we go. And I mean, look at that. 4. That's pretty nice. 4 right there. Yeah, breakers for day trade, standard deviation, and Asia for swing. Yeah, and if you can tie it into your like your weekly profile. All right, let's see where this hourly closes. 27 to about 50 points. Let me see where this body closes at. Okay, now we have the body pull back underneath this high, so we weren't able to close above it. And this is where, see, this is what I mean, like end of day can get like kind of squirrely when there's a target that's like right here. Like you can get fast movement, you can have pullbacks within that last hour. All right, last 5 minutes of this candle. $124 order block. Well, have a nice trade. Weekend, I'm already out of my trade. Nice trade. Thanks, man. Have a good weekend. Where's the swing low land at on the, all right, ran these equal lows. Little reaction from there. See where this body closes in relationship to this candle after running these equal lows. Yeah, if this closes underneath here, that almost um, bodes well for um, no CSD of this candle. We'll see. Because then you don't have a candle body closing above the high, taking that liquidity. Even though you have a wick, a close above would be. You can make an argument for this becoming a CSD candidate. It's funny. Price just hanging out right there. Like 5 minutes of going nowhere. Actually, this last 20 minutes, really. All right, we're going to have the next hourly candle open. So it looks like we ran this and we CSD'd this candle. I'd like to see price just hold 50% and then continue up. That would be ideal. All these flat tops of these candle bodies. Where's the low of this candle? Okay, so we do have this swing low right here, and then this is the low of the hourly. Okay, which would, we could put a down close candle here, which runs that, and then put an up close candle that would kind of balance this area right here. So we'll just mark that hourly low. Okay, so far this is holding. Haven't had any candle bodies closing below 50%. We'll see. This doesn't look very strong to me because it really doesn't take any liquidity. So it's like a temporary holding pattern. This set of candles runs liquidity and then continues up. So again, that's the hourly low right here, which coincides with this set of candles. So I'd be curious to see how price reacts around this area. I like that we didn't create a candle body above this high and then CSD it. So that tells me that we're engineering an area for people to place their buy stops that are going short right here. Right here, unicorn. When I was talking about these candles right here, let's check this out on the 1 minute. Where's the 124 candle? Boom, boom. Is this it right here? 22, 23. Oh, I have it highlighted basically. This whole candle. Yep, still supporting price. It is pretty cool that you can like run these scenarios in a few different ways. Mr. Black, are you talking about this area with this fair value gap? For the breaker? I guess that would, you could like constitute that as one. You really don't get like a run on liquidity down here. I mean, kind of it runs this order block, and if this is holding liquidity, then that could be considered one. And this could just be your entry right there. I just think that like this is your better example of that. Creates a swing high, runs low, runs liquidity down here, which is into a fair value gap. And so that hour gets ran, and then price comes up, and then what do you have? You have back down into this candle if you're trading breakers. And hits 50%. 50% of this wick and 50% of this candle, all that lines up. So that, to me, that was your breaker play, 930. Yeah, this seems to be constituting as a breaker kind of, except you just don't, well, I mean, I guess you have stuff from back here, but you get your run on liquidity and prices going above it. It's just not really like running above it, expanding above it. I really don't like using a breaker type logic um, unless we're way far down in like discount or way up in premium. And I'm looking at an area where it's going to be a reversal. And so for me, I think this is a like yeah, you could have played this fair value gap. I think ICT just talked about like taking trades when price wicks out of the fair value gap and adding to it. But like if this was your fair value gap play, then you had all these. And here's this is a very common signature in price action. So these first candles come in and they set the candle body low. Okay, and they're but we're stacking wicks, but we're candle bodies are getting higher. Okay, but then it's going to send a wick to take out all that engineered liquidity. So anyone that's moving their stop up quickly, now it's pairing orders. Again, the engineering liquidity done on purpose, and that's why you get like the run outside of the fair value gap. But notice how it doesn't get to this one. You got like your breakaway, which is really just a quickly rebalancing, and then this leaves the range. So really, you shouldn't have anything that you can leave your stop right here as it starts the new delivery. But I mean, this is good if you're adding orders right here at 50% of the fair value gap using that breaker. I mean, it's good confluence. Here's another breaker. Okay, if you want to do intraday breaker, okay, we have a run on liquidity. This wick takes out all the sell side, expands up quickly, comes back down into the breaker. And so again, I think he uses that model because I don't think he wanted to really dive into order blocks, but really this is an order block. So an order block is an opposing liquidity run. So this does take liquidity. It comes down here and runs all these lows, grabbing liquidity, expands away CSDs above it. And so what would we expect? We expect a candle to come back down into here and for this to hold price. And what do we get? And then price expands away. Here's a fair value gap. Okay, and another order block going into an order block. So comes down here, takes liquidity in the fair value gap into a previous order block where liquidity stored, CSDs, comes back down into it. Okay, and then we have like a 5-minute propulsion, takes it higher. So I think Maddie used to talk about this a lot in the chat, but an order block, like a true order block, it has to take liquidity. And so that's where you look for those signatures of like, is it really taking liquidity? So like this right here, I don't consider this an order block because it doesn't run liquidity at all. Yeah, this is just like a nice little, okay, so here's the high. So we just ran the high before the high. So we could get an opposing liquidity run and run the low of this. It's possible. unless we get a strong continuation through. Unless this is just a 1 minute like retracing back down into here. It's another good thing to study. Areas of consolidation. Here's the high of this area that's consolidating. Here's the low. We run the high that's not the high of the consolidation area. Then we run the low, and then we move out of the range. Want this. Let's put equal highs. Let's see what Asia did. I just kind of consolidated. Didn't really give any decent consolidation setups. Here's kind of your, if you take this, here's a swing low. Going into overnight session. See, look, that hourly candle's already down close. We'll see if we get that run. We're still a lot of time left. Okay, if I just take this area of price action, so here's an intermediate high, it runs that. Obviously NFP, so we get a way deeper retracement, but we run the lows before coming back up. But notice how this high wasn't ran, but the previous highest high, which would be this one, gets ran before the move, before the opposing liquidity run. Some equal lows put down here too, all across. Um, so when we look at these areas of price action, like you can turtle soup this stuff and you can use this as a stop. If you want to catch opposing liquidity runs. And then you can see the bearish order flow starting to build up right here. So that high gets ran. Candle bodies take out these candle bodies. Notice how they don't take out this high and then CSD. Okay, saving this for later. But they run these candle bodies and then CSD, and so you have entries where it's like order block if you're looking to go short. And that's almost just as good as if you want to turtle soup this. Next. And then that's it. No fair value gap. The only thing they give you is that you have this price leg that creates an imbalance. So see this, if we look at price action up until here, like this is balanced. This comes up and balances this. Is a balanced price range, bunch of wicks in here. This comes up, pretty much balances this. So this takes care of a very, very tiny imbalance, which is nothing, but creates an imbalance. So then this imbalance right here that's coming out of this balanced area, this closes, and then what does this next candle do? It runs up into this candle, into the candle body. see that signature and price runs right back into there, and then boom, NFP. We jam down, close out of that range that we had highlighted that price was hanging out in. Close out of it, come back up into it, run the liquidity, come back up, run liquidity, and then off to our goal. Oh my gosh, this is so painful to watch. Yeah, exactly. How comfortable are you with your short position and your stop loss right here? 30 points away. So this needs to like start to make a move here soon. This has been holding price for a while. We're 20 minutes into this hourly candle. I'd like to see it start coming out of this consolidation range. But it's like we haven't had any real like nice sell side liquidity run yet. Like if we're gonna deliver prices up here, then we need to take out people's stops unless it's gonna run in CSD and then look to pull back. I mean, it could because if we don't close, so here's the hourly candles up here. So we've already got an hourly candle that closed up here. So if we do run this and we wick back hard um, and run sell side on the way back down, then that would, and we don't close a candle body above here, then we're still hanging out in this range, even though we wick the high. Like we need a candle body close above this high to confirm we're moving out of the range. And it's possible because look at this large order block. So we could wick that high and stay within this range. And that gives us days next week to work back into an area of discount before really moving out of that range. So again, we just got to look at the logic of where the candles close and what does that mean for price. And was it the daily? Yeah, let me mark that. Again, real quick here. This was previous all-time high. Okay, so I mean, look at the daily and look where that previous all-time high is at. Okay, we still have yet to close a candle body above that previous all-time high. Okay, so signatures and price again. Failed to close above it. Okay, taking internal liquidity and then coming back down and grabbing price in the area of discount, which this was the weekly fair value gap. And then we CSD it the very next day, Thursday. and close above 50% of this. All right, so here we go. Now we're getting something here with this opposing liquidity run. Maybe this is going to kickstart our move up here. A lot of wicks, not CSD. Here's that hourly candle low. We're starting to get into these candle bodies. Nice. Fair value gap, wick right there. Let's see what we get. There's a small gap right in here. Yes, we'll see how this daily ends up. We should close above that previous all-time high. All right, so if price isn't going to run lower, and this is the sell side it was looking to take, then we need this candle to close above 50% of this candle. So that's what we have to see with this candle. And just like we said, this wasn't a true order block, so yes, it was holding price, but we figured that it might run this for sell side liquidity run. So we talked about earlier. So if we look at this wick on this hourly, we look at areas of 50% for overlap. I'm just zooming in on it. And we have a price that almost comes down to that 50% level. All right, yeah, if we get a nice close above that, that's even more beautiful. What I don't want to see is it immediately rebalance up to this and then wick all the way back down and close below 50%. So with a lot of time remaining left, we can't make any determination yet until this candle closes and we know what it does. Nice. Maddie's saying we got M1 CSD. Take a look at that. Very nice. So we just closed above this opposing liquidity run right here on the 1 minute. Probably see a move back down into here or tap this one and should see continuation. Got some equal highs up here on the 1 minute. But again, these should stand out as red flags. And look what we get. We get that run that runs that. These are turtle soup candidates. Order block, CSD, entry right back down into it. So turtle soup, order block, fair value gaps yet to be determined. This might give you a fair value gap entry right here. Depends on how fast price wants to go. Okay, so confluence. All right, 30 seconds left. Okay, I never count it out until it closes because I've seen price in the last 15 seconds jam way back down here. And then we see continued lower prices, and that was just an immediate rebalance. So, but so far it's looking really good. Nice. So this, we should see price dip back down into this candle body and continue higher. As this ran liquidity and then CSD'd it, so this constitutes an order block now. There you go, clean this back up. Okay, so what we can do for this is you can do a GAN box or just regular box and just look for these 50% entries. So this is like a balanced price range, right? Comes down, runs back up. Very small wick, lots of candle body. So we should get a nice little entry right there, right around there. All right, what I don't want to see is CSD of this candle. We want to see candle bodies hold 50%. If we get CSD of this green candle, because it did run the top of this 5-minute candle, so it did take liquidity. Yeah. We'll see. 25 minutes left. Um, I'd like to see this really start to pop back out. Yeah, so now we're getting CSD of this candle. See how these last 10 seconds fare, but really this candle, if we're gonna see immediate higher repricing, we should have came down to this 50% and then started wicking back out. Again, 25 minutes left in the day. So we got end of day shenanigans. Um, we'll see if this hourly gets ran right here. And this is where you're going to come to a crossroads a lot of the time too, is when you see when price doesn't give you what it should give you. Now the determination becomes with less than 25 minutes left in the day, how aggressive do we want to be with holding towards this? Or is price going to come up short? Or are we going to get after hours action? Sometimes we come up just short and then we get after hours where it just kind of trickles upwards and finally hits that target. So if we get CSD of this candle, that would be ideal. Okay, if I look at this, these two candles, and just measure them as a balanced price range, as price comes back up here, we're looking for, is this holding 50% or is it going to come through here and CSD this candle? Yeah. Yeah, the tops are super clean. It's like just too many. But again, this is why, like, okay, like price can get super volatile. It's like, okay, well, where are we setting our stops at? And so remember I said like if we get a candle body that closes above here, like we just had, this is a failure swing so far on the lower time frame, obviously 5 minute. And so we're kind of hanging out in this candle. So it's like currently this candle has taken the liquidity of this hourly short-term swing high. So I talked about a possibility that we have to keep in mind is that this final hourly candle, if it's not expanding up, do we get CSD of this candle? But I mean, this is like, look at this price action. This is ridiculous. So we just ran these two lows on the 5 minute. So this area of price action like is starting to change where it doesn't look super bullish and it's just not really clean. We got equal lows right here all across. I'm just gonna take this fair value gap right here. We'll just, okay. So we've got 1, 2, 3 times in this fair value gap. So hopefully price goes and we close above here. I feel like if we can't get this candle to close above here, actually close above here, um, that we could see this fail. Buddha, what up? Thanks, brother. Enjoy your weekend. Have a good day. Come on, little buddy. Mm. really dislike sitting in this kind of price action, but it's good to talk over it. It's good to talk about what you expect these candles to do. Dude, there's a lot of action on the 1 minute. Even on the 5 minute, there's just staying in this area. It's like, my gosh. Oh, yeah, this candle was not anything I wanted to see. Yeah, higher, higher. Let's go. Yeah, you know what? Sometimes price is unwilling to do things at a certain time. So again, might not break through this and get a close above here. Might be left for next week. Yeah. Okay, so this 50% rejects. I'd kind of expect prices to go lower unless it's just going to deliver kind of like in an unorthodox way. How many runs did we get into here? One, 2 second run. Yeah. Yeah, I mean that's possible that it's just not going to give us that on. So you have one run, you have a second run in here, but then this is the candle bodies have held just below 50%. It's possible that we don't close above this on the hourly level until next week. Let's see here. Still within the range. We do have quite a bit of gaps that really haven't been taken care of. But we'll see when those get taken care of. Again, looking at the weekly, it's like I don't see why this wouldn't finish expanding. So the only other like another scenario that I um, can see happening on the weekly is, so if this doesn't close above this high, then we're looking at this big wick is a rejection block, And so we could possibly have where we're not going to like close or move higher until maybe we come down into this weekly order block, something like that. So the candle buy doesn't close above that weekly high, and then we start to see lower prices, run that swing low, finish balancing this area. We have all those imbalances that we created on the hourly. Um, and then we use this as our like wick this low, candle body holds 50% or even holds right here on the weekly, and then that's when we get into the new dealing range above here. But as of now, we're just kind of like hanging out, like we close, but then maybe we come back into the range. But we're not really expanding with authority. Oh, here we go. 10 minutes left, and we're not even in the green on this candle. And just ugly PA right here. Yeah, here we go. 10 minutes left. We got speed. I'm just going to move this just above break even in case we get speed down. It wants to run these swing lows, which is fine. I'm just paper trading this for the sake of talking price action and what I would look at. All right, let's go. Come on, 10 minutes. Give us 40 handles in 10 minutes. Not asking for too much. Let's go. Expand above all these highs. I like that the bodies are starting to trail upwards. I just want to see follow through now. There we go. There we go. Push. Oh my gosh, price. Just messing with us end of day. No, come on. Don't want to see highs taken and then wicking down. Man, this is like comical at this point. Algo's like, whoever got in end of day over here, tough luck. Enjoy this barcoding. Uh, Man, I don't know how you're hanging out on the 1 minute chart. Like the 5 minute at least gives me patience. The 1 minute, there's so many ups and downs. Come on, we gotta bag this high. Can't just be running the high before it. Uh, See, this not closing above here is like, I don't like how many candles didn't close above here, or how many candles have been printed and it didn't close above here. See, this could be setting up for that could be the opposing liquidity run for lower prices, and this could CSD this hourly. Man, the only thing that hit all-time highs today was Nancy Pelosi's bank account. All those Nvidia calls. All right, I'm gonna move this up to the bottom of that hourly candle because if it's gonna CSD, it's gonna CSD it. Yeah, I just got a notification from, what was it, Yahoo? What was it? Who was it? Oh, Unusual Whales. Breaking news: Nancy Pelosi's portfolio once again has hit a new all-time high. Dude, I know, freaking Tesla, man. It didn't even really run up on this rip up. Like went down for half the day. It's barely a break even. Yeah, we're getting CSD of this candle that took grabbed this liquidity and then this wicked up and grabbed more. Now it's closing below here. Yeah, I think they're just stacking longs for Tesla in that weekly order block Because you also notice that when like price ran down for FOMC, Tesla really didn't like dive down. So it's kind of moving independently of the market, and it's in a weekly order block right now. So I assume they're stacking longs in this 185 to 190 area. And we get CST of this hourly. 25 seconds left. Easily doable. 6 points. And it looks like they're going to wait to run these all-time highs later. Unless there's something wild with the banking and oil for after hours. Boom. Yeah. The these these right here kind of like, see, exactly what I said. Like this swing high, if we don't get continuation, there's a possibility that it CSDs this candle. That's why you can't just have positions on hope. Got to understand why price is building in this hourly swing high right here, and what you have to see moving forward. So all this was like, as soon as this candle was created, that was kind of the nail in the coffin, which is what we talked about. So, all right, I'm going to exit out of this. I assume price is probably going to run out these swing lows put in for anyone that was long in these after hours. But all right, hope you guys enjoy just breaking down price action, talking about it, what I was looking for, what I wanted to see for continuation, what negated the continuation. Hope you guys have a good weekend, and we'll see you guys next week for more price action, and hopefully we can do these a little more often. All right, we'll catch you later, guys. Have a good weekend. Thanks for hanging out.